What the heck went wrong? The stock of XPO, the trucking company, has been breaking itself up over the last couple of years. First, they spun off the logistics business as GXO in 2021. Then they spun off their truckload brokerage business as RXO late last year. What is left is a company that's focused on North American less than truckload freight business, the largest guy, with the European division that they also had planned to sell, but it looks like that process may be delayed because of the sorry state of the capital markets. Last night, the new slimmer XPO reported what initially looked to me like an inline quarter, slight revenue miss, but decent earnings beat. But you look under the hood, there were some issues. XPO's yield, the revenue per volume moved, came at the lower end of management forecast. December sounds like it might be tough. Let's find out what really happened, because it could be weather related. Initially, the stock was open flat this morning. I get that. But over the course of the day, it collapsed, finishing down about 14%. I have to tell you, I'm a little shocked. This wasn't a perfect quarter, but I don't think it was particularly bad either. Certainly not down 14% bad. That's kind of crazy. So don't take it from me, though. Let's sort this out with Mario Harik. He's the CEO of XPO. Mr. Harik, welcome back to Mad Buddy.
Thanks so much, Jim, for having me.
Okay, so Mario, this was a pretty good quarter. It was certainly the best as you described in the metrics, better than your competitors. You had a lot of things that are going right, and you're also you have a pretty good bullish forecast, and your price earnings multiple is very low. So what the heck happened here?
Well, Jim, sometimes the market gets it right, sometimes the market doesn't get it right. And when you look at our results, we had a solid fourth quarter. We grew our adjusted EBITDA by 53% on a year-on-year basis. We grew our adjusted EPS by 53%, adjusted EBITDA by 38%, and we grew revenue in a soft macro. So very solid quarter, and we're excited about the long-term outlook of the business and our plan we're going to execute on over the years to come.
Could it be, was the cadence weak? Was December a weak month?
Well, December was weaker from an overall freight volumes perspective, but it was impacted by weather in the back half of December. But this said, our January volumes are up and to the right. They are better than typical seasonality and better than the fourth quarter, despite the softness we're seeing in the industry. So the industry is going down on tonnage. We are going up on tonnage.
Right. Well, I was positive with Ben Stoto, who works with me, that perhaps JB Hunt reports a not great number, but it's not horrible, okay? And they give you good outlook. Old Dominion reports a good number and a really good outlook. Your stock goes up twice, once and then the next time off those two. So then when you report, it gives back a lot of what happened during that rally. But I could argue that you had a better quarter than both of those companies.
Yeah, I agree with you.
Right?
I mean, overall, again, you look at revenue growth, you look at volume growth, you look at yield growth or pricing growth as well. And we continue to see that strength here early in the first quarter as well.
Do you think there could be some people who just say, you know what, this company, they told me that if they did if they merged Europe with U.S. and they spent a lot of money on brokerage and spent a lot of money on logistics, you would love it because it would be all together. And then Brad Jacobs said, you know what, we have multiple envy, and he undid it and expected us to like it. And maybe people just say, you know what, I've seen too much breakup here. I'm like moving on.
Listen, we are very confident in our plan. When you look at our North American LTL or less than truckload business, it's a great industry, a bedrock of the economy, and we have a solid plan to grow margins, to grow earnings, and capture profitable market share while capitalizing on a strong pricing environment in the less than truckload industry.
Okay, so how about, at one point in your conference call, you say volume fell basically for the whole industry, but not for XPO, which grew tonnage. Maybe it's some sort of group move that just says that in the end you'll be pulled down at the same time?
Well, listen, when we look again at the first quarter, we are anticipating volumes to be up as well, which goes contrarian to what we're seeing in the industry.
Yes, it is.
And we saw that in the month of January.
Well, now you're spending $525 million on capital expenditures. That is a statement that you believe.
We absolutely do. It's a high return on invested capital business that generates more than 30% ROIC. So the more capital we deploy, we can add capacity so we can gain profitable market share and operate more efficiently.
You also indicate that while we had these supply chain problems, you're not part of that. You've been training drivers. You've got the good fleet of, you also have the trailers. You make the trailers. Yep. You're training drivers. Where are we in terms of XPO's ability to be able to help the supply chain mess up?
Well, first, let's start with drivers. It's always been tight to hire truck drivers.
Yes.
But last year, we graduated more than 1,700 truck drivers from our driver schools. And in our own manufacturing facility of trailers, and we are the only carrier that can produce trailers, we produce more than 4,700 trailers that we added to our fleet as well.
So you clearly had to have been a part of what people are saying to me, that the supply chain woes are indeed easing.
They are definitely easing, and we're hearing it from our customers. Today, 2/3 of our customers are industrial companies. You look, for example, at the auto sector, where the auto sector had pent-up demand, but now we are seeing those supply chain woes easing up, and they're being able to fulfill more of that demand, which is showing strength, for example, in the auto industry.
Now, I have become a believer in the last 4 months that Europe, of all places, is actually getting stronger. Now, I know you had plans maybe to offload Europe. Is there any sense that maybe you should keep it because Europe's suddenly taking a turn for the better?
Listen, we always look at every decision we make as how are we going to create the most amount of shareholder value. Now, when we look at our business in Europe, we obviously spoke in December about stopping the process on the near term. However, the business is performing really well. We grew in the fourth quarter, Jim, we grew our revenue on a constant currency basis by 9%, and our EBITDA on a constant currency basis by 10%, and what was a soft macro in the European market.
Well, I'm just going to have to say that unless people really believe that there's going to be a recession coming in the next 3 to 6 months, they have gotten a chance to be able to buy XPO much cheaper than it was just 3 or 4 days ago for no reason whatsoever, because it should have been more expensive. So I want to thank you for coming back on Mad Money. And that's Mario Harik. He's the CEO of XPO, a company we followed for many years and made a lot of money for you that's doing this breakup. What's left here seems very interesting. These prices, Mad Money's back here for the break.